Okay, hi everyone, and welcome to today's webinar. Apologies for the delayed start. I was having some technical issues, but we are back. Um, okay, so for today's session, we are going to be talking about correlation. So if you guys have any questions throughout the webinar, feel free to just pop them into the chat as well. Let me just make sure that everything is working now. Okay, looks like everything is fine now. Yeah, so let me know if you guys can't hear me or can't see my slides throughout the webinar. But in the meantime, let's go ahead and get started. Okay, so as per usual, a disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. So the contents of this webinar and any accompanying material are not intended to be solicitation of funds or recommendation to trade a financial product. Okay, so I'm your host for today. I'm Melanie Chong. Oop, didn't add my name here, but yeah. So I'm Melanie, and I'll be a speaker for today. I'm an investment analyst from Everest Fortune Group, or Rocket, and who are finalist for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We're going to firstly look at what exactly correlation is, understanding positive and negative correlation, strong versus weak, correlation across multiple timeframes, and using correlation to identify support and resistance or breakouts. Okay, so what is correlation? So it basically refers to the statistical relationship between two financial instruments, so that can be of stocks, currencies, commodities, etc. So positive correlation basically means that the two assets move in the same direction, while of course a negative correlation means that they move in opposite directions. So as an example, if the price of gold and the value of the US dollar have a negative correlation, then when the price of gold goes up, the value of the US dollar will drop, so on and so forth. So I have a chart here just to demonstrate the scale of correlation and the value of the correlation. So typically a perfect positive correlation is +1, while a negative perfect correlation is -1. And we typically look for strong correlations with values of 0.8 and above or below -0.8. So it's basically used in trading to identify potential trade opportunities and manage risk. So, for example, if a trader holds a long position in a stock, for example, they might consider taking a short position in a negative correlated asset to offset some of that risk in that long position. So it's important to note that correlations can change over time, so traders must continually monitor their relationships. Additionally, correlation does not equal causation, meaning that just because two assets have a high correlation doesn't mean that one is causing the other to move. Okay, so my FX book has a correlation table that you can use to find the most and least correlated forex currencies in real time. So there are a lot of correlation tables that you can find on the internet. This is just the one that we normally use. So how it works is you can make use of this filter that we have circled here um, to find what you're looking for and adjust the time frame to whatever you prefer as well. So we typically want to look for correlations that are higher than 80 and lower than -80. So you simply input that into the filter here, and it will highlight all of the currency pairs that match up with what you have requested. So that's a really easy way of finding correlations. Okay, another correlation table you can refer to is this one from CMC. It shows you how the different currencies relate to one another as well. Okay, so let's talk a bit about the correlation currencies that tend to be positively correlated. So these tend to be Aussie dollar and Kiwi dollar, euro and the pound, dollar index, CAD, and franc. Okay. Of course, there are others as well, but these are just the main currencies that tend to, um, more often than not, be positively correlated normally. So let's look at an example. Here we have um the Aussie dollar and Swiss franc, and this is on our 1 day time frame. So we're going to be comparing the Aussie dollar and the Kiwi dollar first to show the positive correlation. So I've used the Swiss franc as our base currency. Okay, and this is our Australian dollar and Canadian dollar. Oh, sorry. I've used Australian dollar as our base currency, and we are comparing between the Swiss franc and the Canadian dollar. Of course, you want to make sure that you're looking at it on the same time frame. So here I'm using the daily time frame for both. Okay, and using a feature on TradingView, which I will introduce to you guys in a second, you can compare the Aussie dollar Swiss franc with our Aussie dollar CAD. So you can see how they are pretty similar in terms of the chart. Another example is our pound, or rather it's our US dollar and Japanese yen. So here I'm comparing pound dollar and pound yen charts, and you can see the shape of the chart is a lot clearer, or it's a lot easier to compare when you are looking at it on the line chart. Again, this is on TradingView, and I'll show you guys how you can use this function as well. Okay. Lastly, we're gonna compare Aussie dollar and Kiwi dollar. As I mentioned earlier, these tend to be positively correlated as well. So the base currency we're using here is our Japanese yen. So looking at our new Kiwi dollar, or rather Kiwi yen and Aussie yen, you can see how similar the charts are as well. Okay, so this is what it looks like on our Aussie dollar. So you can see prices are currently moving above the Ichimoku cloud. And if we look at the candlestick chart for Kiwi dollar, you can see it's also pretty similar in shape. Okay, but it's a lot easier to compare when you're looking at it on the line chart and side by side. Okay. Last example, we're looking at our euro dollar and the SPX. You can see how it's quite similar in the shape as well. Okay, so positively correlated assets, we tend to use this more as a gauge for the trend, more so than specific levels, because as you can see here, it might not always look like this. So just in terms of the trend, you can see the SPX is moving in an uptrend, so we can expect our euro dollar to also move in an uptrend. But in terms of the where you should place your support and resistance levels, these might not be relevant. Unless, of course, we're looking at something like Aussie and Kiwi, where even the shape of the charts and the price movements are pretty similar as well, then you can go ahead and do that for those charts. Okay, so now let's look at the negatively correlated currencies. So some assets that tend to be negatively correlated would be your DXY and gold, as well as the DXY and your Aussie dollar. So in this example, we are looking at our Euro, Oz, and Oz franc. Because you can see here, it's given us a minus 90.9% negative correlation. So this is our Oz franc on our 1 day time frame. And this is our Euro Oz on a 1 day time frame as well. So you can kind of see already when prices are in an uptrend, you can see the opposite happening for our Euro Oz. Okay, and when we compare them side by side on the same chart, you can see exactly the negative correlation between them. Okay, now this example we are looking at Oz dollar and dollar CAD. So in this case, we will be comparing our Oz dollar and CAD Canadian dollar. Okay, you can see um, for the blue chart, our Oz dollar, when prices are dropping, our dollar CAD is actually rising, and the opposite as well. Okay, last example. I think you guys kind of get the hang of it now, but the gold is represented on the orange line chart, SPX represented on the blue chart. And you can see how negatively correlated these two are as well. Okay, so it's pretty straightforward. And I'll show you guys how to display these kind of charts on TradingView in a little bit. Okay, so now let's look at how we can use correlation to identify breakouts. Okay, so firstly, we have looking at gold. With prices moving in an uptrend, US dollar moving in a downtrend since they tend to be negatively correlated as well. So prices are moving above this resistance level on our gold. So we are expecting that same thing to the breakout to happen on our US dollar as well, but breaking out of this support level. You can see subsequently that's what happened as well. Okay. Okay. Let's look at how you can use correlation together with news events to strengthen your trading strategy. Okay, so first example we are gonna so the two examples we are gonna use for news events are the US unemployment claims, which occur 12:30 p.m. every Thursday, and central bank interest rate decisions by the FOMC meetings. Okay, okay, so let's get into it. So our DXY our DXY on this time frame, which is 1 hour time frame, occurred 15th June at 12:30 p.m. Showed prices breaking out of this overlap support level, okay, giving us a bearish signal. On our MACD is also giving us a bearish momentum here. Okay, so on the other hand, as I mentioned earlier, DXY is negatively correlated to gold. So we are expecting gold to have the opposite effect and be in a bullish momentum. You can see here on our gold, looking at the same time frame on our 1 hour time frame, prices break above, and at the same time at 12 o'clock or 12:30 rather, 15th June, and prices shot up significantly. MACD also giving us a bullish momentum. Okay, so this trading strategy of using news events and correlation works better on shorter time frames. So maybe your 30-minute and maybe even 15-minute, but we normally won't go below 15-minute because it tends to get a bit noisier on those time frames. Yeah. Oops. What just happened? Um, okay, just give me a second. I'm not too sure what happened here. Okay, I'm just gonna restart my slides. So just give me a second. Okay, can everyone see my slides now? Okay. Okay, I think it's working now. Thanks, everyone. Okay, so as I was saying, yeah, so we were talking about how gold and DXY tend to be negatively correlated and how you can use news, events, and data releases in your trading as well. So, 1 minute, 5 minute time frame tends to be a little bit too noisy. So that it tends to be too much noise and it's a bit more difficult to analyze on those time frames. So the lowest we'll go will probably be 15 minute, 30 minute, maybe 1 hour as well. But this method works better on shorter time frames. Okay. Um, Next example, we're gonna look at our FOMC meetings. So on the 14th of June looking at our DXY on our 1 hour time frame, you can see prices shoot up. Okay, and it even goes or breaks above this overlap resistance level. MACD is also giving us a bullish momentum. So of course we are expecting the opposite to happen for our gold. So you can see how gold dips in comparison, breaking below this support level as well, this swing low support. Okay, so this normally happens because gold is or when the dollar strengthens, for example, when we've seen here, um gold becomes more expensive in other countries since gold is often priced in USD. So it reduces demand for it globally. So conversely, when our dollar weakens or DXY drops, gold then becomes cheaper in other countries, so it boosts its demand and pushes up its price. Another reason is that both the dollar and gold are typically seen as safe haven assets, especially during times of economic uncertainty. So like we see here, oh, um, our previous, yep. So when our DXY drops, um, since both tend to attract investors at different times, so if our dollar is kind of in a weak environment or when inflation fears arise, investors would tend to turn to gold as a store of value, so therefore driving up its price. Okay, and of course, if it's in a strong dollar environment, investors would prefer to hold dollar, so leading to a lower demand for gold, resulting in gold price of gold dropping. Okay, next let's look at unemployment claims again. So you can see last year, 12th of October, unemployment claims were released at a lower value compared to the forecasted value of 211K. So the actual is 209K. So since unemployment claims, of course, are lower, it results or it tells us that the US economy is doing well and it's a good sign. So we can see our DXY price shooting upwards at the released once the data was released. So this is on our 30-minute time frame. Okay, so instead now we're looking at our euro dollar also on the 30-minute time frame, and you can see how the price of our euro dollar actually drops in comparison. Okay, and that's because the euro dollar tends to move in opposite directions from the DXY because the DXY is heavily weighted towards the euro. So like we see here, if our DXY drops, um, excuse me. So if the euro strengthens, the DXY typically falls and vice versa. So here we are seeing DXY fall or rise instead. So that's why we're seeing the euro dollar drop. Okay. Another reason is probably that the dollar and euro are two of the most significant reserve currencies. So that's why they tend to have a um inverse relationship. Okay. I think that's it for my slides. So now let's take a look at some charts, and I will also go through the FX book um correlation table as well. Okay, my Wi-Fi is a little bit slow today. I'm not too sure why. Okay, just give me a second. Okay. Um, okay. I think it's working now. Just give it a second to load. Okay, while that's loading, I'm just gonna pull out our charts and we can take a look at some charts together. So I'm not too sure why it's not coming up. Mm, okay, let me try and refresh this. So sorry about this, everyone. Not too sure why it's taking so long to load, because it's not the Wi-Fi. The Wi-Fi is full bars, so I'm not sure why it's taking so long. Okay, let me try and refresh the page. Okay, just give me a second, everyone. Okay, I don't think I can get anything to work because even my FX table is not loading for some reason. So I think I'll go ahead and end the session here first. Um, once again, I'm so sorry for all the technical issues, but I hope you guys found this session helpful. And also, if you guys have any questions, feel free to pop them into the chat. Yeah, I hope you guys found this session helpful. And I'll see you guys again next week. Thanks, everyone. Have a great rest of your week. Bye.